It seems like every time we turn on the news, Europe is in the headlines, whether it's because of war or a humanitarian crisis caused by that war or a political crisis. Well, we need to understand how people and businesses are impacted by these issues. And so we invited David Hirsh to talk to us. David has been covering European stocks for over 2 decades, and he leads the effort at TimesSquare Capital on researching European companies. TimesSquare Capital is the manager of our Steadyhand Global Small-Cap Equity Fund. And this is among a series of conversations we've had with TimesSquare on the issues you've told us are on your mind: Europe, tech, China, Asia, emerging markets, and also how the portfolio is positioned today. And with that, I'll leave you to my conversation with David.
Morning, David. How are you?
Well, how are you? Thanks for the time to speak today.
It's quite early, so you likely haven't had breakfast yet.
Not yet, but soon to come.
Now, I want to get into Europe, David. You've been covering the area for decades, and what we hear in North America is just all the challenges the region is facing, and there's quite a few of them. And what I'd like you to do is maybe address what some of these challenges are and how they're impacting humans and businesses, and then we can get into some stock-specific questions once we just cover that more broad topic off.
Sure, absolutely. I think what crystallizes a lot of European issues right now is the European failed energy transition. We have a clear mismatch between lawmakers who are trying to move towards a significant CO2 emission reduction while having not fostered the right corporate environment for companies to invest in the necessary infrastructure to move towards a more renewable energy source in the future. This situation is now compounded by the war in Ukraine, which is not only causing a huge humanitarian issue within the continent, huge human catastrophe, but at the same time, it's actually taking away a significant portion of that natural gas, which we were considering to be a significant portion of that transition from fossil fuel to a more renewable environment. Europe is now contending with an energy independence crisis, compounded with a security autonomy crisis. Short term, the consumer is going to be hurt in that environment because we cannot really fix these issues simply with central banks reducing demand. This is an infrastructure supply-driven issue. I think that will take a little longer to iron itself out compared to more temporary inflationary trends in other parts of the world.
So, David, despite some of the comments that you've just mentioned, we hold a big chunk of the portfolio in Europe. I think a quarter of the portfolio is invested in continental Europe today. So take viewers through why, despite some of these big time issues that you've just talked about, you still seem to be confident in finding ideas in the region.
Sure. Thank you very much. European companies have been struggling with economic challenges in Europe for decades. Many of them have had to learn how to become less dependent on Europe and more global dominators to survive. Viscofan is a really good illustration of this. It's a global leader in artificial sausage skins, which is an oligopolistic market, which makes it very interesting from an investment point of view. Europe for Viscofan is about 40% of revenue. North America is about 30% of revenue. And Asia, Latin America is another 30% of revenue. Artificial casings is an interesting market because there's a conversion from natural casings to artificial casings, as they are cheaper to manufacture and easier to handle from a production line point of view. The product is actually, if you think about it, very mission critical, but only represents a small value of the end product. If you think of a consumer experience consuming a sausage, the casings and the look of the sausage is very important to the consumer experience, while only representing a very small percentage of the value of the overall product. That traditionally leads to a lot of pricing power, strong margins, and a very resilient outlook in terms of revenue. So Viscofan is a good illustration of where it is positioned within the value chain and really benefits from that positioning. We can really illustrate in these high inflationary environment the pricing power of the company. If we look at Q3 2022, for example, revenues were up 25%. Out of that 25%, 10% of revenue growth came from pricing. Another 10% of the revenue growth came from being exposed to currencies linked to the US dollar, and regular volume growth was only 3 to 4%. So this is a company that generally should grow 3 to 4%, able to grow top line 25%, without actually having any significant deterioration of margins. So really well placed in a higher inflationary environment thanks to this oligopolistic market structure and its mission critical position within its value chain.
And there are examples like Viscofan litter across the portfolio. David, let's switch now to the UK, another region that's having some challenges in the news for all the wrong reasons these days, whether it's politics or some of the happenings in the financial markets in the UK, which have caused quite a bit of turmoil. And again, despite some of these economic or political headwinds, we own a reasonable chunk in the portfolio, about 15%.
That's right. A lot of our UK holdings are very global niche dominators as well. Tate & Lyle is a good illustration of this. While it's a UK-based company, it's a specialty ingredient manufacturer specialized in sweeteners. It has actually over 40% of its revenue coming from North America, 30% of its 35% coming from Asia, Africa, and LATAM, and only 20% of its revenue coming from Europe. So while it's quoted in the UK, absolutely, it's a really global business. And we would more focus on the end market exposure and the transformative journey the company is undergoing as it's selling its more commodity type products, artificial sweeteners, and really focusing on highly added value whole solutions, multi-ingredient solutions for its customer base. That transition from relatively low added value commodities to relatively complex multi-ingredient solutions allows the company to illustrate stronger margin progression in the future, more pricing power, and we think a more important relationship with existing customers, which ultimately lead to resilience of revenue going forward. So the fact that it's quoted in the UK really overshadows the strong dynamics the company is undergoing and that transformative journey that we've been able to capture by investing in the group.
And I think that's very consistent with what we've seen TimesSquare do with all its names is that you're quite agnostic about where the companies might be listed or headquarters. It's far more important where the company's revenues are coming from. Now, David, I want to wrap up by talking about something that you and I and other members of the TimesSquare team have talked about in the past, and that's just your general excitement about Europe. And we've talked a little bit about it, but I mean, what I'd like to do is just end by letting you talk about why you are quite excited about Europe. It's not just, hey, there's some defense here, but no, there's some genuinely good opportunities here.
European small caps have been strongly penalized for their domestic macro headwinds. And many of these global niche dominators, which we've described in today's discussion and are well illustrated in the portfolio, have been sort of thrown out with the bathwater as we worry about the European end markets and we worry about the European economy. We think this creates an interesting opportunity for these companies that tend to be very global in nature, but that are currently being whose valuation is currently being hurt by this European dynamic situation. As a result, valuations are coming down on names that have good visibility, particularly if you're able to capture these highly resilient models that are growing globally, generating strong added value by moving up the value chain, and historically having been able to generate strong returns and strong margins and strong free cash flow.
David, thanks for doing this with us. It's nice to record this conversation that we often have in private and share with others.
Great. Thank you very much.